Hey traders, quick market update on the US stock markets. Let's get straight into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Alright, let's get straight into the US market. Let's actually bring this up to a nicer sort of level here. Nicer design layout, should I say. And let's have a look at the indices. Here we go, S&P 500. So S&P 500 first, so we can see that with the S&P 500 we can see that it did break out of this level through here. It had a flush down through here, and then the market opened up today basically, and opened up, ran up, hit this level of resistance, came back down and just sort of held through there. On the Dow Jones, we can see that the market, same thing as well too. It had a flush down. It ran right back up. The Dow Jones, actually one that was closing the highest out of all the indices at almost 0.77%. Not even 1%. But you can see it actually ran up and hit this level and then rejected and closed there. So it's actually a weak side as well too. Russell actually closed on the negative at 0.35. It's actually still moving now, as you can see, so 0.35, and you can see that is it still moving? Anyway, so you can see how it's actually 0.30 now. It's actually, yeah, you can see that where it's closed right now. You can definitely see how it opened. It ran right up, came all the way back down, came all the way and closed here. So this is the Russell, closed lower there. That's actually a very weak sign for the Russell, and the same for the Nasdaq as well too. You can see how we got a bit of a flush down, a flush out of that level through there. It had a gap up, ran up into that level, and now came back down and sort of closed, sort of almost basically break even for that as well too. Looking at gold, gold had a bit of a nothing day, had just a bit of a slight down day through here. Not much going on with gold. If we look at a longer term picture, we can see that we do have this sort of action happening through here. So I would expect a bit more downside to happen with gold, but if we do start to break above this level through, especially this 109 level, then we can probably see a lot more upside with gold. And obviously oil as well too. Oil has oil is still it's just still having this nice down day through here as well. Am I missing data? Am I missing data? That's Friday's action. Where's Monday's action? Yeah, I don't think I can see Monday's action here. Maybe it's not on the charts yet. So anyway guys, so that's basically what I do see with the markets. To me it's still looking very weak. To me, we have a lot of topping action coming through here. I'm still very bearish overall guys on the markets overall, but you just don't know. You know what I mean? You just don't know. Last time, if you look at the Dow Jones Industrial Average, and let's actually just bring up a weekly chart, you can see that the last couple of times we did get big pullbacks. You can see this is actually very similar to back here in the middle of October. It was very similar to the middle of 2011, where we had a big flush down and then we're just going sideways, not really doing much, and then the market took off through here. So the question is, are we going to do that again? Firstly, I believe that we're likely to have a bit more downward movement first, if we are going to do that, and then a move up. So looking at this whole level through here, are we going to see a bit more downside, or are we going to see more upside? Let me just take everything off the screen here and have a real good look at the chart. You can see here by looking at this chart that we do have, and if I draw this trend line up through here like that, you can see how that's that weekly trend line, and that weekly trend line is going inside with that as well too. So I'm not sure if it's that there, or is it more that there. I'd have to use, say, that there, wouldn't it? So in any event, so that's basically what I do see there on that. The only, as I said before, the only caveat around this is that I do see that this still has the potential to have to run back to the high side. We did get a bit of a flush down here, as I said, in the middle of 2011, and then we had a big run up. But every time this market has been dipping below this moving average, we've got to run back up. Now, the thing is that the difference is that the gap between this moving average is actually a lot deeper than it has here. Now, if we get a break below and a real nice break below, and we continue to break below these lows here, then then we're now starting to see a bear market. Now we're starting to see lower peaks, lower troughs, and now we're probably going to start seeing more downside. So, but that's yet to be seen. Fed did nothing as last week, and so I am expecting more downside to come by looking at the way this market's working, the way this market's sort of acting out and stuff like that. If we go back to the daily chart, I do see that this is a very, we've had these big, strong sellers of these weak sort of buying activity through here. So I'm expecting this sometime soon over the next week or so. And yeah, we'll just see what happens. I'm not sure what's going to happen, guys. You don't know what's ever going to happen. Obviously, you got to ever say that. You got to say that. But it's really important to understand that that especially where we are right now, it's just important to, if you do trade, make sure that you got your risk management and all that sort of stuff in place. You know what I mean? So that's not a disclaimer. That's just me. That's just being intelligent about trading. So anyway, guys, I'm out of here. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.